You're probably looking at the surging prices of Samsung, electronics, and SK Hynix and asking yourself, is it too late? Should I jump in now for a final 20% gain, or is it time to walk away? Here is the reality of 2026. The semiconductor industry is currently at the peak of a massive rally. But remember, this old market wisdom, the party is at its absolute height, exactly 30 minutes before the police arrive. Today, we are going to analyze why this supercycle feels different, and why a $7 trillion shadow banking bomb might be ticking right under our feet. Look at the charts for Micron, SanDisk, and Intel. We aren't seeing steady growth. We are seeing a J-curve of vertical ascent. While the S&P 500 trades at a PE of around 23, Micron is trading at roughly 8.9 times forward earnings, suggesting that the market believes this profit growth is unprecedented. The value of memory is being redefined. In the past, memory was a low-margin commodity. Today, thanks to HBM high-bandwidth memory, it sits on equal footing with CPUs and GPUs. If you believe the momentum in U.S. chipmakers will continue, the Korean market still has room to run, but the uncertainties are mounting. A recent report by KPMG, titled Global Semiconductor Industry 2026, makes a bold claim. We have entered a genuine AI-driven supercycle. Over 73% of industry leaders surveyed believe AI will be the primary revenue driver, causing a vertical spike in sales. This isn't just a trend, it's a fundamental restructuring of supply chains and labor. Companies are racing to pivot their entire production lines to AI inference, memory chips to meet the insatiable demand. But here is the catch: massive investments of $600 to $700 billion are required. If the AI bubble bursts before these investments turn a profit, the fallout will be catastrophic. We cannot ignore the macro environment. Even if regional conflicts subside, oil prices aren't likely to drop to $60 overnight. Maintenance backlogs and the need to refill strategic reserves will likely keep oil between $80 and $90 per barrel through the end of the year. If tensions escalate again, we are looking at $150 or even $200. This keeps inflation sticky. While the new Fed chair, Kevin Hassett, might lean toward stabilization, other Fed officials like Kashkari are still hinting at rate hikes. High interest rates are the natural enemy of high-growth tech sectors. Now let's talk about the shadow banking system. I am deeply concerned about the private equity PE debt market. I estimate the hidden distress in shadow banking could reach $6 to $7 trillion, comparable to the scale of the subprime mortgage crisis. We are seeing non-performing loans in Korea climb into the trillions. If investors start pulling money out of private equity, funds a slow run, and the funds cannot meet those redemptions, we will see a financial panic. In that scenario, AI won't matter. Even if AI isn't a bubble, it will be sacrificed in the liquidity crunch, causing chip prices to collapse. So where does that leave us? For now, the supercycle remains intact. If you hold Intel, Micron, or Samsung, congratulations on the gains, but do not become complacent. Keep a close eye on the House Financial Services Committee meetings in mid-May, specifically regarding private equity debt. Watch the exit, not just the party. The music is still playing, but the police might be closer than you think. I will return in the next session to discuss exactly what signs will signal the end of this supercycle. Stay analytical.